Hello, guys. Welcome back to Stacking Stocks, and thank you for tuning in today. Well, we hope you're staying safe and you're getting ready to energize with more content from our channel. So let's get started. NEO stock is strongly holding the $40 price level, and we've done the due diligence on the stock that we need to share with you in this video. We think that if and when NEO rallies, it's going to be unexpected and likely very big. For those who have been following our channel, NEO is a stock that we've been discussing for a while now because we believe it's got so much potential. We ensure that we take our time to research the stock's fundamentals and technicals to give you accurate information. Well, that's what consumers and investors should be looking for: facts. The latest Hertz and Tesla deal sparked some insight into NEO that we believe will awaken the stock at some point in the future, probably later this year or early next year. Tesla bagged an order of 100,000 electric vehicles from the rental company Hertz in the last week of October. How will NEO make use of this information? NEO management will use this information to evolve their business in a similar way to Tesla and try to land similar contracts in China, given their business model is almost a replica of Tesla. NEO saw its stock rise by about 10% in the month of October, outperforming S&P 500, which rose by about 3% over the same period. But even more interesting and predictive of NEO's potential to gap higher and awaken is its correlation to Tesla. What we think investors are missing in terms of the bigger picture between NEO and the correlation with Tesla is that they're actually very correlated. NEO and Tesla have been moving in sync over time, and actually one asset's behavior has an effect on the other asset's behavior. In the last week of October, Tesla gapped a lot higher than NEO, and that's because of the Hertz deal earnings and positive momentum. However, we're still looking forward to seeing NEO's earnings. And given NEO's earnings are good, which we expect they will be, as well as NEO Day later this year, we expect the gap between NEO and Tesla to narrow and for NEO to have an upside potential. NEO released excellent second quarter financial results on August 11th, making NEO stock look very undervalued. We believe that NEO stock is worth over September and October results, and the stock will keep rallying until it reaches greater heights. NEO stock has had a difficult year so far. It ended 2020 at $48.74 and is now down 20% year to date. In fact, NEO stock peaked at $62.84 on February 9th, and it drifted down to a low of $31.22 on May 13th. Since then, it has floated up to the $40 price level. But as we've already said, we think it can go much higher. Now let's look at NEO's financial results. NEO's electric vehicle deliveries were up 111.9% over the second quarter of 2020 and up 9.2% over the first quarter of 2021. At that quarterly pace over the next 12 months, on a compound basis, its deliveries will be up 42.2% year over year in 1 year. This implies a potential slowing of its growth rate, but that might also be expected given its higher base now. Its gross margin fell to 18.6%, up from last year, but it was down from 19.5% in the first quarter. Moreover, the company is still booking losses. Its loss from operations was a negative $118.2 million, and its net income loss was a negative $90.9 million. We believe it's going to take a while before the company really starts to make any profits. NEO is currently underperforming the market and has disappointed it even further by announcing that total revenues for the fourth quarter are expected to be between $1.45 billion and $1.57 billion, below market expectations of $1.74 billion. The stock closed 6% lower at $40.64 and down 24% year-to-date as of November 9th. EV stocks listed in the U.S. consolidated and traded range-bound in 2021. As of November 9th, Tesla shares were up 23% year-to-date, whereas NEO's Chinese rivals, Li Auto, went down 14% and XPeng nearly 4%. A muted 2021 for EV stocks follows a stellar rally in 2020, when Tesla gained more than 700% as equity markets rebounded sharply following a global COVID-19-induced market crash in early 2020. Shares of NEO shot up over 1,000% in 2020. As a result, the best way to value NIO stock is to use a price to sales methodology. For example, Tesla has a PS multiple of 14.5 times sales for 2021 and 10.7 times for 2022. This is much higher than NIO's multiples. NIO stock trades at 7.6 times 2021 sales and just 4.6 times 2022 revenue forecasts. Now, granted, NIO should probably have a lower PS multiple, given that it's not yet profitable. But as we've mentioned in the past, its sales are growing faster than Tesla. From our projection, NIO's 2022 sales versus this year show a massive gain next year. Tesla's sales are also forecast to grow massively in 2022. So if we gave a 25% haircut from Tesla's PS ratios, NIO stock should trade at 10.875 times 2021 sales and 8 times 2022 forecasts. NIO's target value should be $61.118 billion for this year, close to the current market value. Generally, many people are positive about NIO stock. Let's discuss the factors that make NIO stock a potential value creator. It's worth noting that NIO delivered 3,667 vehicles in October 2021. On a year-on-year basis, vehicle deliveries declined by 27.5%. However, the decline in deliveries was due to restructuring, upgrade of manufacturing lines, and preparation of new product introductions. We believe that the markets are likely to focus on the potential growth coming in 2022. That's likely to be a catalyst for stock upside. In terms of industry tailwinds, the central government is targeting 20% of new cars sold to be new energy vehicles by 2025. William Li, founder and CEO of NIO, believes that 90% of new car sales will be electric vehicles by 2030. These might be ballpark estimates. The key point is that the industry is positioned for steady growth over the next decade. NIO seems to be one of the players that's positioned to survive the competition and grow. It's worth noting that as of the second quarter of 2021, NIO reported a healthy cash buffer of $7.5 billion. The cash buffer was sufficient for funding medium-term growth plans. However, in September 2021, NIO announced an at-the-market offering of $2 billion. It seems clear that NIO is preparing for some big investments. These investments can be potential acquisitions to boost manufacturing capabilities. Another important point to note is that NIO reported a vehicle margin of 20.3% for the second quarter of 2021. The vehicle margin for the second quarter of 2020 was 9.7%. With growth in deliveries, it seems likely that margins will continue to improve. In the next few years, operating cash flows will provide additional financial headroom for aggressive growth. NIO is a homegrown EV manufacturer in the world's biggest automobile market, China, and is well placed to establish itself as a major EV player. The company beat Tesla to grab the largest market share in China's all-electric SUV market in April with a 23% market share, according to China's Automotive Technology and Research Center. Tesla called the market in China critical to the EV industry in its 2020 Battery Day presentation. For NIO, growth is not limited to China, though. The company has already launched its ES8 electric SUV in Oslo. Further expansion in Europe is likely in Germany and the Netherlands. International expansion will ensure that vehicle delivery growth remains robust in the coming years. Now, considering the company's cash buffer, it seems likely that NIO will expand in all key European markets in the next 12 to 24 months. NIO already has a manufacturing agreement with Zhonghuai Automobile Group. The latter will be expanding its annual production capacity to 240,000 vehicles to meet the growing demand. Therefore, other than chip concerns, which is temporary, we don't see any challenge in terms of manufacturing capacity in 2022. Another factor that makes people bullish on NIO stock for 2022 is the new launch lineup. In the coming year, the company plans to deliver 3 new products based on NIO Technology Platform 2.0. One of the products is expected to be a lower-price sedan. Now, this can significantly boost the delivery volume. With these factors in consideration, NIO stock looks attractive after underperforming almost through all 2020. We would not be surprised if the stock is among the top-performing electric vehicle stocks in the next few quarters. Well, that's it for today. Don't forget to like, share, and subscribe. Thanks for watching, and see you next time right here on Stacking Stocks.